And my next guest has been bullish on semis for quite some time, highlighting Micron and AMD and their AI potential. Joining me now is Kim Forrest, Bokeh Capital's partner CIO. It's good to see you, Kim. Welcome.
Thanks.
Are we getting to a point in which the specialist goes, okay, these people are getting too crazy with these valuations yet for NVIDIA?
Well, NVIDIA is tough because it's always crazy high, in my opinion, but they tend to come through, right? At first, it was Bitcoin mining, and everybody had to have NVIDIA chips for Bitcoin mining, and now it's AI. So are they lucky or good? And I would say both.
Lucky and good, right? It helps, and obviously they've been on a tear as a result of it. Micron is not a name that I usually hear in the same breath. Why do you think this is a horse to bet on in the AI race?
Sure. Well, they're a maker of commodity products, and the one I'm more interested in is NAND, N-A-N-D. And that is a way to store zeros and ones, and it's getting cheaper all the time as opposed to old spinning disks. So here's the thing. If we're really going to have AI take off and do its thing and make the world a better place, AI eats data, and that's what makes it smart. So you have to store it somewhere. So that's why I like storage companies and NAND in particular.
So let's hope all of these are recession-proof, right? I mean, I do think there's two reasons why people are piling in. One, because the story, especially with NVIDIA, is amazing, but also because we want growth in what could be a challenged growth environment. Have we already priced in a lot of the hope and expectation for how well these companies will do over the next 6, 12, 18 months' time?
Well, I'd say for the next 6 months, probably. I mean, we started off of a very, very low base. And I think that was caused largely by the sell-off in November and December. And that, to me, was just smacks of tax loss sales. So you take a higher-priced asset that's now trading lower, and you can offset some gains by selling it and creating a loss. And I think January especially saw the rebound of tech, and that's people buying back those positions because the companies weren't broken. They were just using it for a tax matter. So, but looking forward, I'd rather look 3 to 5 years out, to tell you the truth, than 18 months. But I think that tech really is going to grow. AI is intriguing, and a lot of companies are going to put their toe in the water, and they are going to soak up semiconductors because you need a lot of compute power. You need to be able to collect data. And it all says everything like that runs through a semiconductor.
Sure. Is there anything, corners of the market, corners of tech, corners of the semis that don't excite you?
I guess maybe the older technologies, but even they may have a place. Like TI does a lot of analog. We'll say that. They are the interface between the real world and the digital world. And they may even have a place at gathering data, but we'll see.
Then are you preserving capital to put to work if we get lower valuations in a macro downturn? Or do you just have to say, listen, that may or may not happen. I'll just take what I can get at these levels and, not be overly cautious?
I'm not really somebody that tries to avoid a recession because we've had, I don't know, something like several hundred recessions forecast. I'm kidding. We haven't had that many. But there has been, over the past 10 years, a lot of recessions that have never come. And I would rather plan for the future, have my cash flow, have my cash needs met, but invest now and invest into the future.
All right. I appreciate it. Kim, thanks for checking in with us today.
Thanks.
Kim Forrest with Bokeh.